Welcome to another weekly update for 99 Club members. We've already completed the overall market update, so it's very much a kind of wait and see for Tuesday and Wednesday. However, it looks like the market is not quite yet pricing in what I believe that the Federal Reserve will not raise rates, and I think what will happen then is that the market will get a boost upwards, specifically perhaps gold miners. As I've been commenting on this after they dropped out frustratingly for a couple of my trades all of a sudden here when this all started. But as I was indicating before, I knew at some point they were going to level off, and it was just waiting to see when that would happen. Here's the ETF for all the gold miners. We might just be, we are starting to get a very steady line of support on some of these. It's clear actually if I focus in on a couple of them. Here's Agnico Eagle Mines AEM. You can see quite a clear line at a round number, which I like, at around 50. So I think this is a nice play moving forward with a tight stop loss at about 49. They're all got similar patterns. You can look at ABX, and there it is again, tight line of support there at around 17. As it collides with this sharply rising moving average, which is kind of like a catalyst to push things higher. Well, you can see this on the weekly charts if I show you that. There's that 40-week moving average there. There's that line of support. There's AEM. So tight stop if nothing else, which should get a positive reaction to Federal Reserve keeping rates on hold. There's Royal Gold, similar story. If I had to pick one of the bunch, I'd probably say AEM, which is one I'll bet on. It's got a very tidy line. I like how it's at a round number like that. So that'll be my trade for this week. After that, I think it's going to get a little bit dicey out there as we get closer to the election, and the market is not yet pricing in fully the fact that both candidates, Clinton and Trump, are both anti-trade. And that's going to have an impact on things. So I don't think the stock market's even thinking about that yet until what maybe a couple of weeks before. It's extremely short-sighted, skittish market with a lot of nervous and dumb money in this. So being very selective at this time. If in doubt, stay out till the dust settles with all this. Update on some existing trades is WB. I was this, as you know, I was in this one down here. It's leveled off here. Tested this 45 level and succeeded, which I quite like. If it holds 45 level, this one's good to go. And if it gets comfortably above 50, that'll be just carrying on higher. HSKA, another one, beautiful. Bounce. Look at that, off the line the whole time. Still in that one. We've got Amber. This one had a little bit of a slip, as I showed you last week. Hung on to that that sort of level, and kept on pushing higher. So that one's still in play, as is AMAT. Both just hanging out. And again, might be a little bit of uncertainty on Monday, Tuesday when the Fed announces no rates. Things should keep on pushing higher and continue. DY. This one did stop out, as mentioned last week. This one's just slipping away there, so you can't win them all. And what other ones do we have here? A couple of other ones I was looking at. Again, the FXY. This is on a quite a tight upwards trend there. It's that one's still in play. Stop loss on this one will now be about 93. I've been trading this one ever since it was down here, playing the bounces. As I've got overall gold, seems to be hanging on to this support line around 125. That's not a bad entry point for the actual metal. And if rates keep on hold, then that will send this one north. You could bet on the actual metal itself with a very tight stop loss in there again. That's around something like 123.5, 124 even. As you can see, there's quite a clear line there, and what the Fed says on Tuesday or Wednesday should only send that higher. So gold miners seem like a little bit of a it's quite a nice little setup at the moment there. Let's just turn to the overall market picture regards shorting it. Touched on this on the overall market update. I think this is going to be another 2001, 2002. And here it is. Here's 2001, here's 2002. And as you can see, it's a very long, drawn-out bear market with big, scary drops and then huge bear market rallies, big, scary drop, huge bear market rallies. And on it went. This thing dragged on for ages, if you recall. And I think this could be a mirror image of what's going on right now. I mean, we're in the year 2000 right now, somewhere around here. I think as the election gets closer and things unfold that I've been describing, particularly at the seminar itself, that they no longer try and sweep under the carpet until the election is out of the way. I think a lot of things are going to start unraveling very soon, and I think I won't be surprised at all if we see what's in our future. It's another 2001, 2002, and we're about September 2000, something like that. So now there's different ways to short this market. We can wait until this thing drops and then get another bear market rally and wait for the tip around here and do it again there and so on. And I intend to do that as well. But I'm going to divide up into three the position, the amount I want at risk on this. I'm not going to put it all on at once. I'm going to put about a third down on what I think is going to be something like the top. Then I'm going to put another third down when it breaks below the 70-week moving average. And then I'm going to keep a third in hand for the first bear market rally tip that looks something like that to get in around there as it tries to bump into a descending moving average. So I'm going to spread it out a little bit. I don't think we're at the top just yet. I'm thinking though it's not far off. This bump from the Federal Reserve after their meeting on Tuesday, Wednesday could be the last surge upwards. And as soon as that starts running out of steam, I think I'll be deploying my first of three shots at this. So the vehicle I'll be using, and now the trouble with spread betting, although it's tax-free, is that there's unlimited losses if you don't play it. For example, if you just bet pound per point on the Dow Jones or whatever, the Dow Jones keeps going higher and higher, and there's no limit to what you could lose. So the way I'll play it will be options, but you could also play the way I'm going to play with spread betting. Because if you trade something like the SPXS, which is a triple short on the S&P 500, then as you can see, the price currently anyway is only nearly $13. So that's only 1,300 points on IG Index. So the amount you can lose is obviously, that can only go to zero. So that's a nice proposition because the downside is limited, which is what I like about options. If I buy an option, which would be a call option on the SPXS, with a January 2018 expiration date, that's to be the vehicle I'll be using for that. Whatever I pay for that option, that's all I can lose, which is the beauty of it. Because I tell you, if this is going to be another one of these 2001, 2000, there's going to be some wicked whiplashes upwards like this, which are going to threaten open positions unless you're, well into that position, which is why I want to try and time these peaks. And also, January 2018 just gives you way ahead of the game to just ride it out, whatever happens. So they're the vehicles I'm going to be using as and when the time comes, and we are certainly getting there. 1/3 of it to be deployed soon. So that's I think that's all for this week. So I will speak to you again next time. I'm going to have a clearer picture. In the meantime, hopefully going to snatch up some profits from gold miners along the way. Catch up with you then.